So real quick, just talking about like genius business ideas, right?
Yeah.
I mean, a lot of these corporations that you said are in the red. There's corporations that are trying to like do this like long-term super profitability thing. And some of them are very successful with it. And then some of them are trying to do that and they end up just being in the red a bunch. Like we were just talking about Peloton.
Huh.
And it's like if you're gonna go invest in some stock, don't invest in Peloton. It's over. They're trying to just hang on and hold on for dear life. It's just from looking at their public financial statements that you can tell that
Yeah.
when you can read the financial statements.
Any experienced accountant can tell that.
Yeah. And yeah, if any experienced accountants are watching this video, they're going to be like, yes. Or they're going to go look up their financial statements and be like, that's correct. Leave
Hmm.
that alone. They might dig
Yeah.
themselves out of the hole. And if they do, cool. But they've basically just had to take on like a ton of money just to keep operations afloat since 2020. And so that's why it's like not looking good because their cash flow is very bad. But anyways, so I'm going to try to log into Instagram so I can show you this video.
Hey, I got a quick question for you while we're on this topic.
What's
Have
up?
you ever heard of a company called BlackRock?
Yes, of
So
course.
I've heard that what BlackRock does, they get these companies in the red, like Target even. Target was used for an example, that
Hmm.
department store. And then they end up owning more shares than anybody. So then they end up kind of controlling the company. So that way they can put it on their specifications so they can guide the companies,
Right.
whether it be into wealth or not wealth, but whatever. But they have more guidance because they own at least 49%.
Yeah, there's a lot of holding companies that do that, like
Uh-huh.
Berkshire Hathaway.
Yes, that's another one.
Yeah, that's all they do. That's
Yep.
all Warren Buffett does.
Yep.
He finds a company that he can invest in. And his thing is he doesn't want to see everybody has like their own spin on it, right? Like with Berkshire Hathaway, they invest in companies, and Warren Buffett wants to keep the operator in place. He's not trying to replace the operator that's already doing stuff in that business. He's like, no, like I want to
Mm.
basically put my money into here and own like a majority share. So it's kind of like I'm buying the company because I own most. I mean, really, you are. You own if you own the majority share of a company, then you have the most equity in it compared to anybody else. It's your company. But
Do they have a model after that they follow? So they're not in the red anymore, or you know what I mean? Like
I think
this.
he I don't think with Berkshire Hathaway, I don't think that they specifically invest in companies that need to be turned around. Like what they look for is he looks for what does he call it? Expensive sticky air. That's what he calls it.
Really?
And so what that basically means is like one of the companies that Berkshire Hathaway owns is Coca-Cola. And so the reason why they like companies like that is because okay, everything is already good with the company. We don't need to go in and fix a bunch of stuff. Like this company is going to keep growing and keep doing what it needs to do. And I just want to own most of that so that I could basically not have to do much and the company keeps doing what it needs to do, but it can expand its operations and grow a little bit faster because I put my money into it. And then over time, I'm going to get the returns from that without having to think too much about it because they're just going to keep doing what they're already doing and what they've been doing for years, for decades.
Okay.
And so they call it expensive. He calls it expensive sticky air because he wants to make sure that the company has high margins based off of whatever they're producing or manufacturing, and that and that's the expensive part. Even though Coke isn't expensive, like the cost of making one bottle of Coca-Cola after you already have all the machinery and everything to be able to make Coca-Cola, it's way less than the $2 that you pay for it.
Yeah.
You know, so it's like, and it's sticky because if you drink one Coke and you really like it, the chances of you continuing to drink Coca-Cola
Yeah.
forever are pretty freaking high.
Yeah. Yeah.
So it's like really sticky. And so anyways, there's different holding companies have different strategies. That guy Alex Hermosi, right? He has a holding company. The Acquisition.com is a holding company, and they invest a minority share in internet-based businesses. But what they do specifically is they look for businesses that are doing 1 to 3 million in profit per year that are internet-based businesses, and most of them are stuck there because they need operations and they need higher level executives to start. Like most of the time, the CEO is doing almost all the stuff,
Yeah,
and they're
sure.
managing everything, and they're like, okay, let's get you to stop doing all the stuff, and we'll help you get higher level executives to do the stuff for you, because those people, each of them need to be smarter than you in this area
Yeah.
so that they can make the decisions on your behalf without you even knowing it. And then they'll be able to scale it further for you. And so, but what they do is they invest in a minority share. So they don't own all the company. The owner is still the owner, but they still profit. And then they take all of their trainings and everything that they've developed internally for their previous business, and then they give them to the business. So they're like, hey, this is what we already figured out. This is where you can fix your sales team. This is where you can make sure that more people are showing up to more appointments. You need to change your pricing because we've already
Yeah.
figured all this stuff out. So this is like, they basically like come in and help make it more profitable.
They've got a model. They've got a model.
Right.
This is how we do it. It works 100% of the time. And this is what we're going to do to
Right.
your company.
Exactly.
Hmm.
But this is something really cool. Now I'm going to share my screen and just show you. This is an Instagram reel that I saw, but I thought this was
Well, I lost you there, Ron.
hear me?
Yep. Yep.
Can you hear me? Okay, cool. So I'm going to share my screen, and hopefully this video will play the sound. We'll see. Start it over. So do you remember that game in Pokemon Go? It was like years ago. People
Yeah,
were
yeah.
running around with their phones trying to catch Pokemon, like
Yeah.
8 years ago, 9 years ago.
That was a big thing.
So check this out.
I can't hear this at all.
Thanks for that. Let me see. I will relay what he was saying. So Niantic is the company that created Pokemon Go, right?
Uh-huh.
And what Niantic has just announced is that they are creating a new AI software that's like an AI navigation software. And so kind of like, Apple Maps or Google Maps, right? And
Yeah.
but what they did is they took all of the data that they got from everybody playing Pokemon Go. So
You got what? Are you kidding me?
I'm not, this is for real. So they made Pokemon Go, and Pokemon Go made people run around with their phones all over the city and all over the place. And to catch a Pokemon, you had to take a picture of it. It was all highly GPS stuff. It's like you got to go to this certain place, you find a Pokemon, you have to run around, your phone's tracking you, making sure that you're going a certain distance, and then your Pokemon eggs can hatch. I know because I played it.
Yeah, that's funny.
And then it took that data that every individual user was collecting playing Pokemon Go, that everybody's collecting for them, and they're feeding it into this AI machine to make this new like geo navigation app. And so that's an example of a company
Wow.
that is thinking very long term. Right?
Yeah.
Like they one business to get all the data that they need to build another one. Right.
So what you're telling me is they did that to collect data for what is coming.
Right.
That's the reason why they did that.
Yeah. And they made money in the process too.
Oh my God.
Yeah. And so
That's unbelievable.
yeah, so that's an example of like how some of these corporations are thinking ahead and doing it correctly. And even if they're in the red right now, it's okay because this is the plan and this is what they're going to do, right? Now, there's a lot of other corporations that are trying to do things like that and failing miserably. That's why a lot of corporations in corporate America is just in the red, because they take on a bunch of debt so that they can start some plan like this, and then it doesn't pan out. Then their operator or whatever, whoever they have in place to make decisions, they don't really know how to like right the ship when it's going wrong. You
Yeah.
know, another example is Uber. Uber is super successful, right? I think they made like 34 billion or something like that last year, um, top line. But hey, man, sure, yeah, I like your hair. But the beginning, it was hard for Uber. They had to get a lot of investment, and they weren't profitable like at first, right? They had a lot of problems in the beginning.
Yeah.
And then there was like a lot of problems with like the transportation system wanting to shut them down. Taxi drivers are like revolting and they're all pissed. And
Yeah. Yeah.
but it's like ultimately, if you're building something that customers want that they want to use, they'll continue to use it.
Yeah. Pretty cool. Pretty cool.
Yeah,
Hmm.
but yeah, interesting stuff.
Yeah. Well, that's how these companies grab control over, a lot of companies in America,
Right.
and then they say, hey, this is the way we do it. Any objections? And we'll see you later. You know what I mean? See you later, CEO.
You know something really interesting that everybody knows about how profitable Amazon is, right?
Mm.
And it's like it's widely known that it's super profitable. But something really interesting is that do you know who one of the person that Jeff Bezos studied when it came to building Amazon? When he studied this person, and that's Sam Walton, who
Really?
is
Yeah.
founder of Walmart.
Sure.
And Sam Walton has a book that's called Made in America. And it's like a biography or autobiography. I can't remember if it was written by him or written about him before he passed. It's about the story of Walmart and how it got started. Because it got started as a small department store or small market in Arkansas. The first location's like here's a store in Arkansas,
Yeah.
and then it turns into Walmart, right? And so the level of focus that Sam put into building Walmart into like what Walmart is, he used to, I know because I have the books on my bookshelf back there, but so he would go into other stores and he would see what's selling, what isn't selling. He would go into stores that were doing really well, and he would go as far as going into stores with tape measurers and measuring out how far away the aisles are apart from each other and like
Wow.
how big the shelves are. And like he's just modeling everything and trying to learn from everything. And then once he had like his actual store down so that it was profitable, so that it would draw people in, people would go through all the aisles, they would buy the stuff, and everything was set up good there. Then he would look for new locations to build the exact same thing. It's like we need to build the exact same thing the same way. We're not compromising. It needs to be exactly the same, systemizing
Wow.
everything. And he went as far as like flying over locations. Like you would have flyovers of where he thinks Walmarts should be. And then he starts testing where they should be at. And like, okay, when there's new developments going on in the city, and he would look at traffic patterns from the air and see like, okay, where should we build the Walmart?
Yeah. A lot of research went into it.
Right. And
And
so,
then
but
it's, yeah, rinse and repeat.
something really interesting though is so Jeff Bezos studied that and said, okay, we need to do stuff like this. And Made in America, the story of Sam Walton, is required reading for every single executive at Amazon. You get
No
hired
kidding.
as an executive at Amazon, you have to read that book. Mandatory. And
Wow.
yeah, the crazy thing is, so Amazon is basically the same as Walmart, except they don't have physical storefronts, right? But they're doing the same thing, selling merchandise that other people are making. Buy the merchandise, sell it, make a profit. So Jeff Bezos took Sam Walton's attitude and ideas to like the next level, and said, I'm going to do the same thing, but I'm going to do it on the internet and
Mm-hmm.
make it so that your storefront, nobody even has to go to the storefront. Like you just
Yep.
got to log into the website and we'll bring the stuff to you. Years later, um, I think it was like 2018 or 17, Amazon is so successful that it buys Whole Foods. So I think that this is like,
You're right. You're right.
because what I think is like, okay, they started off Jeff didn't decide to try to beat Walmart at their game. He didn't say, we're going to do we're going to make storefronts. He said, no, we're going to take all the principles, all the things that you learned, we're going to apply it to our thing. And we're going to do it on the internet with no storefronts. So that means more profitability. Because guess what? Like Walmart had all these shipping and distribution issues too, but they had to distribute things to stores. Then if people come buy it, just like stores out of the equation. But we're just still going to have distribution and shipping and all that stuff, but just no stores. I got that to be, he didn't beat them at their own game. He played his own game so well that he bought their game. He didn't buy Walmart, obviously, but he was able to buy a whole other chain that does the exact same thing. So I just find that stuff like really, really interesting.
It's pretty incredible. I don't know if I ever told you this, but we wired an Amazon facility. And man, when I'm telling you they streamline everything, it's incredible operation to see.
It's just super efficient.
Yeah. They've got like tons of vans, right? You know, those Amazon vans, right? So these big loading trucks come in one end of the building and everything is scanned and put on a conveyor. That conveyor goes through this whole process, ends up at the vans that are parked right in the building, waiting to go. It's like a drive-through. And they load the vans.
So they go in one end, out the other.
Yep.
Assembly line, kind of.
All conveyors. But the assembly line's mostly at the beginning, unloading the truck. And then everything on that conveyor will go to the van it's supposed to load. And these vans are, I mean, these trucks are just coming in and the vans are getting loaded and off to their route. It's just unbelievable.
Yeah, it's crazy to think about, especially when have you ever seen that picture of Jeff Bezos when Amazon first started in like 1996 or something like that? Let me pull it up. Jeff Bezos, really photo is on. Okay, let me share my screen so you can see what I'm looking at here. Yeah, it's crazy to think that this is what turned into what you just described. Hey,
yeah. What guy's Jeff? The balding guy?
Jeff. Yeah, that's Jeff right there.
Wow.
Yeah.
Now the dude's like jacked. Isn't that something?
Yeah, it's
crazy.
Hey,
Ron, so that was his accountant looking at his books.
Hey, yeah.
Wow.
Exactly.
And didn't he start that with his wife too or something?
I don't think she was ever an owner. I'm not sure. I do know that he left his job at a hedge fund in New York to start that.
Oh, no kidding.
Yeah.
I didn't know that about him.
So, I mean, he understands finance.
Yeah.
You know, and he understands like the corporate world. You're working in a hedge fund, you understand finance, you understand investing.
Yeah.
You understand accounting, right? When he left, I saw this from an interview from him. When he left that hedge fund job, he like went on a walk with his boss and he said, hey, I think I really want to start this company, the internet. His boss said, Jeff, I think that sounds like a great idea for somebody else because you already have this awesome job. Like, what do that, you know?
Yeah, yeah.
And so they did it anyways. And in the beginning, they were just selling books, and then they were like they're just packing all the books in their small little warehouse, and they were loading up the books, putting them in packages, driving them to the USPS, right? Mailing out all the books that people just bought.
That's right. They started off on just books.
Yeah.
That's right.
The initial goal was instead of having it so that you had to go to a bookstore to find a book, and then sometimes they didn't have it in stock, they had to order it. It's like the initial goal of Amazon was to have every book that's available on Amazon. So you could just buy it from Amazon and you can get your book. You don't have to keep looking to see who has this book or where it is.
Wow.
And then
I forgot about that. I really did. I forgot about that. And now look at him.
He's building spaceships just because he wants to. Do you know about that?
I knew Elon Musk was. I didn't know Bezos too.
Yeah, Jeff Bezos. He's got a company called Blue Origin.
Oh, okay.
But their goal, I guess, what they were trying to build is the The way that he describes it is he wants to build quick shuttles that can get to orbit because he thinks that over time we're going to have like stuff in orbit, like different civilizations like in orbit, where it's like, think about if you have a spaceship, right? That's like shaped like this ring light, right? And on the inside is where, because if it's like this, it can spin around and you can have artificial gravity on the inside, and where you can have like an actual like ecosystem in here. So there's like, this is like where the city is. There's like cities and parks and different things, right? And so I don't know if you've seen any sci-fi movies where they have stuff like that. Like in Interstellar, they did, right? Towards the end of that movie. So his goal is not to build one of those, but to be able to build like the first reliable transportation system that goes in and out of orbit that anybody can take. And the way that he looks at it is like, just like how there's all these very successful trucking companies, right? Before there could be a successful trucking company, there had to be roads. Somebody had to make roads. And now because somebody made roads, there can be trucking companies that get stuff made. And, you know, for Jeff Bezos to make Amazon, somebody needed to create the internet. And so because somebody created the internet, he was able to create Amazon. So he's looking at this reliable transportation system in and out of orbit as one of those type of roads where like people can go start to create other stuff and like do stuff out there that's not just scientific research. So, but yeah, he's doing the whole space thing too because he just likes to do it, and you can when you got that Amazon money, you know?
Yeah, sure. Hey, so Ron, when you're looking at these companies, are you saying, okay, this is a good one to invest in, or this one's not? Do you even care?
That's what I look at for that. I'm a little bit more interested in that now, especially after doing accounting and like going into that field. There's a really great book on investing that if anybody's interested, I would advise you to go check it out. It's called The Intelligent Investor by Benjamin Graham. Benjamin Graham was Warren Buffett's mentor. He taught Warren Buffett about investing. And so the premise of this book is based off of value investing. So what this means is instead of buying a company or buying stock in a company because of what the stock is doing, this is what a lot of people do. They look at the stock, they look at what the stock is doing, and then they predict what they think the stock is going to do based off what the stock was previously doing. And then it's like, that's just a great way to lose money. Excellent way to lose money. That's what you're doing, right? You might as well just put it into the S&P 500, just let it sit there instead of do that. You know, if you want to invest in a specific company, what you do is you look at, for Amazon is a great example. I mean, and it's a great example because we all know how it turned out already, right? But back in the day, what they were doing is they weren't profitable for the first 20 years. And it's because Jeff Bezos kept taking on investors and getting more money. And then they'd spend all that money on distribution centers, assets, different things for the business. Even though the business was making money, it was never turning a profit. The expenses were always more than the revenue that they brought in. And so he had to keep borrowing money for 20 years. But if you looked at that, a lot of the stock investors at the time that built their whole career on looking at stock, because Amazon's been a corporation from day one, so they've been on the stock market, but they were like less than $1 per share. Stock investors, financial advisors they were calling it a scam. They're like, this is a scam company. Like, don't invest in that.
God.
Right? Words to eat, if I ever heard any. Like, imagine you just put like $5,000 in Amazon back when it was $1 per share.
Yeah.
Yeah.
Oh my God. The right advice would have been sell everything you have and invest in this company.
Right. But see, what a lot of them weren't doing is they weren't looking at like, okay, if you just take a look at Amazon's financial statements, their cash flow statements, and like their balance sheets, like, well, what are they actually doing? It's like, oh, okay, they're buying distribution centers, they're buying trucks, they're buying, they're adding more employees. Like, you can see the assets growing. And then if you look at like their letters to shareholders, it's like, if you can look at what Amazon's saying to the shareholders what Jeff is saying to them every year and look at their books and their financial situation, then you don't need to look at what the price of the stock is. It's like, okay, he's saying, hey, I know that we're not turning a profit yet. There's no dividends to pay you, but you didn't invest in this company to get dividends. You know that what we're building is we're having the widest selection of products available to the customers, and we're going to have it so that they get them faster than anywhere else. That's the goal. Everything that we do is to have more selection, getting to them faster. And because that's what the consumers want. So if you're investing and you're not profitable, but you're doing all of that, not to pay dividends or to pay all of your executives, but so that the customers are getting exactly what they want, if you know that it's going to grow. And so he's telling them like, hey, like just chill out. Like you're going to get a return on your investment. It's going to be in a while. But until then, I need some more money. So come on.
Yeah.
So, and that's what went on for 20 years. And so share that story because that's the stuff that you look at. Or that's the stuff that I would look at if I'm going to think about buying any shares in any certain company. It's like, what's their mission statement? Is their mission statement, is it actually serving the people that they get money from, like their customers? Or is it serving some weird, ethereal, like greater good for the world? Is their mission statement or what they say that they're about, does it match up with the financials and the balance sheet and what they're actually spending their money on? And if it does, if that all matches up, and it's like you can see that they're buying the things to fulfill this mission statement that's for their customers, and it's working because their sales are going up and going up and going up, but they're not profitable because they keep taking on debt to buy more of the things so that they can continue to do the things. They're making sales go up and up and up, and their stock price is really low because stock investors are like, oh, stay away from that. They're not even profitable. If I see that in the future, I'm like, I'm buying that. And then I'm letting it sit there for years and years and years and years because that's what's going on. Yeah.
That's cool. That's good to know. Tips with Ron Carter. Yeah.
Yeah.
We're not even going to touch on Bitcoin tonight, but we're going to get your opinion in the future episodes.
At a later date. This is too much information to handle right now.
Yeah. I'm on mind blow already. I didn't realize that Jeff Bezos went that long, 20 years.
20 years not profitable. They would have been profitable if he just decided to stop investing in the business, to stop taking new assets. And I mean, think about it. It's like owning all those trucks, buildings, like they have jets and stuff now. They didn't, at one point they didn't, right? They had to keep buying those things incremental. And so it's like there wasn't profit. But at first they did that because at first they were using USPS to ship all their stuff. Guess what? There's a cost to that. It's like every time you make a sale, it's like eating out profits for every sale. It's like once you own all that stuff and you own it outright, your distribution is basically free.
Yeah.
And that's where all the profits have came from. Buying all that real estate, buying all the plane, the trucks and everything. The only thing that they're paying for is labor of the people who are operating those machines. And that's way less. And you can ship that many products that have been sold. And all of it, everything that's on that plane, everything that's on that truck, everything that's on that 18-wheeler is all your stuff. That's not parceled with other people's stuff. It's just all your shit. And you're just paying the salary of the people who are operating those machines.
And while that growth is all happening, your legal write-offs are as well, where you're not paying taxes, at least many taxes.
Right. Because you own a lot of real estate, you're getting a lot of tax write-offs for that.
Yeah. It's brilliant. It's a brilliant plan. Well, thanks for sharing that one, Ron.
That's why they're at where they're at.
Yeah, absolutely.
But yeah, this is interesting. This is what I mean when I say I love business stuff. And when I'm like teaching somebody sales for like my current like online business, this is like stuff I can't even talk because they're just like, how do I get somebody to buy my thing today? And and so this is the step where I think that like once I go into like the accounting world, I'm going to do like really well there because like this is
Yeah. Well,
How
you
to
know what it
listen.
is, Ron? A lot of people don't understand a big picture. They just need a quick fix,
Yeah.
you know?
Or they
And
don't
that's
want to understand the big picture.
yeah. And
And
that's the
I'm a
whole
picture guy. That's what I like.
yeah, that's the whole challenge. You gotta see growth in years and in time, you know?
Right. I think one of the biggest challenges in being an entrepreneur at any level, right, is being able to like zoom out and see the big picture and then zoom in and see exactly what needs to be done in the nitty gritty right now
Yeah.
that contributes to that big picture. Like
Yeah.
being able to go back and forth between the lenses, zooming in and zooming out.
Yeah, that's a great point.
Because you
Like
can't,
you gotta have that focus, you know?
yeah, because you could dream all day and nothing will happen if you can't zoom in and just take the action that needs to be taken right now,
Yeah.
you know, and you can take action all day long, totally zoomed in, very granular approach. And if you can't see where it's all going, you could end up taking action in circles.
Yeah.
Yeah.
Absolutely.
Well, I guess that's how this one relates to mindset for you guys there.
Right on.
Big
I
picture,
loved it.
little picture.
Thought that was a great one.
Yeah. But really cool. I hope you guys enjoy this. We were just like chatting and we're like, screw it, let's hit record again.
Yeah.
Um, yeah. But if you guys want more mindset content, you want to see me and Brian talk about things, this is where you do it.
You name it. We'll go deep on it.
Yeah. All right. We'll see you guys in the next one. Bye.